All right, what's up, Tycoon? Super excited for today's video. We're going to be looking at Chargepoint, okay, ticker symbol CHPT. And I do viewer requests every single week, okay? So if you have a stock you want to see in the next video, let me know down below, all right? We're going to be using my supply and demand strategy in this video, and we're going to be taking a look at some chart patterns. And I'm also going to break down the 180-day simple moving average, all right? That's the simple moving average we're using right now, being that we're on the 180-day 4-hour chart. Okay, this is one of my favorite charts to look at. We're going to break it down. Okay, so get right into it. This green right here, this is going to be our demand zone. Okay, our red box up here, this is our supply zone. All right, these are areas where demand has come in into the market and pushed the price lower, or I'm sorry, higher. Okay, meaning that there's an imbalance of demand, all right, an imbalance of buy orders in these areas driving the price higher. Okay, in this area here, we have our supply zone where there's an imbalance, okay, of supply of sell orders at these areas driving it further lower. Okay, and in between here we kind of have our pivot zone, okay, where we're going to see, are we going to come here and pivot and try to rally back up, or are we going to head down lower into demand? And again, we did it here when we initially touched demand. We came up into our pivot zone, consolidated a little bit, came out of it, tried to go up, came back down, and ultimately rallied back up into supply. Now, when we did that, we created a double top pattern. Okay, this is a bearish chart pattern. What this is going to let us know is that, most likely we can, get in some put option contracts and ride this momentum down towards towards support zones. Okay, and take profit either at the support zones here or take it down, somewhere in this pivot zone. Or if you're a really patient trader, you can try to ride it all the way down into demand. Right now, if we come down in here and get another bounce, okay, that's going to give us a double bottom pattern. Okay, and this, it could be a sign of, some possible bullishness, and we could head further up back into the pivot zone. Okay, so that's really the main thing that I'm going to be looking at, is if we come down into demand, and we're going to be able to, go ahead and get some buy orders filled. Now, right here, it says triggering stop losses. You may be wondering why I'm saying that. Well, it's because if we look at our 180-day simple moving average on our 180-day 4-hour chart, okay, this is, an area where we know a lot of people are looking to find support, right? Where we know that people are looking to, hey, possibly get in on a swing trade if we bounce here and rally up. Well, market makers, okay, need to gain liquidity and draw liquidity through the market. So what they do is they'll trigger everybody's stop losses, okay, and get people to sell. And when you sell, they're the ones buying, okay? So you try to buy the dip here off of the 180-day simple moving average, and it doesn't work. We drop dramatically, keep on dropping until we hit this demand zone. All right, we touch the bottom of our demand, and then we rally up, okay, and eventually find this as support. And again, we can see here right now we are breaking below it. All right, and if we come down in here into demand, there's a nice possibility that we could get a nice push upwards. Okay, but if there's no more demand in this area, we will head lower. Okay, so look for this as a possible area where market makers could be trying to gain some liquidity, trigger some stop losses, and be prepared to look for a potential bounce in this zone. And your risk to reward can be clearly defined when you get in. If you want to try to get in as close to the bottom of demand as possible, you can have a stop loss shortly below, and if we trigger that, you're out. And then your reward, you can try to catch some momentum up to the top of the demand zone, or you can try to take profit at any of one of these resistance levels, the pivot zone or supply. Okay, it just depends on how long you think it can bounce, and your overall game plan when heading into the trade. Okay, so try to break down a few things, make the charts a little bit simpler for you guys, so that way when you're looking at things, it's going to make a lot more sense to you, and you're going to start to understand some of the price action. Okay, the stock market is nothing but a live auction, process. And, the candlesticks are telling you, okay, it's telling you where demand is. It's telling you where supply is. All right. And, if you use certain indicators such as 180 SMA, you can gain, start to gain a little bit more foresight and see how, they're gaining liquidity here, entering into demand, driving the price lower, triggering a lot of stop losses here. Okay, and then they're driving the price just all the way back up till they hit this area where there's a big supply imbalance. Okay, and if we see that nice sell off, We come back down again dramatically, repeating this pattern. So, it's trading in a little bit of a channel, a sideways channel here. And again, we're going to be looking to see if we can get a nice potential bounce in demand, and, have a stop loss below, and below there, you could try to, short it and grab some put options and ride the momentum down. All right. So thank you guys for watching. Don't forget to like, comment, subscribe, and I'm out.